Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis.
Hey, it's David Stendahl with tonight's Deep Dive. Today is November 13th, 2017. Got a little cold flu type thing going on, so I'm a little out of it today, but the systems are always watching the market, so we're not really overly concerned. But for tonight's deep dive, I'm going to look at coffee. The ETF would be Joe, and the key right here is that the market is consolidating. That's going to be the focus for this particular deep dive. We've got the short, intermediate, long-term all pointed lower, and we don't have anything giving us a clue as to what's going on from a technical rating, which you'll often see when the market is in a consolidation type period. So this gives us an indication that something big is going to occur, but we don't know exactly which way it's going to go. So what I want to do is I want to make a point that it could go higher or lower, give you some evidence as to where things are going to go, and then as system traders, we just simply react to what the market does anyway. But I want to at least point out a couple things. So we have a support gap. That's what the S gap represents, a support gap going on in coffee right now. This is a daily chart for coffee. You can see the market has been consolidating, moving sideways, bouncing up, bouncing down, doing a lot of nothing. And we're right now up against this level right now. The 130.5 level is essentially where coffee is finding a little bit of support and resistance. It's broken above, and right now it's basically sitting on this support level. So if that is our starting point right now, it's hard to see it in these support levels because they're very small and inconsequential. And so what's basically happening is that there's a support gap to the market. And the best way to see that is not necessarily in the dailies, the weeklies, or the 240-minute bars, but the easiest way to actually see that there's support gaps to the market is if we come up to the website and come to the targets. This is the target levels for coffee. Here's the closing price, and you can see that there are some gaps to the market. And when you have a support gap, if the market sells off, and the systems are short right now, there's little to help to prop up the market down to the 127.15 level. Then if it should continue to fall off and break below the 126.35 level, then we have again another support gap, nothing in its way, and it could theoretically fall down to the 122.80 level. This chart takes into account the dailies, the weeklies, and the 240-minute bars all together, and gives a weighting to the different things, and that's why we're always quoting the strength to the individual support or resistance levels. So this is just a really easy way to get right down to it. Where is the support, and do we have any types of gaps? So when you're in a consolidation period like we are here in coffee, that with nothing for the most part there to buoy it, that you have that opportunity that very little could push it over the edge and it could really start to sell off. I just want to point out a few more little things here since I mentioned that we're actually short the market. This is a graphic that shows how we're doing in the soft sector. So we're long cotton, we are short coffee, and we're long sugar. And right now in coffee, we actually have a loss, $656 loss going on right now, at least as of 5:17 p.m. What does this mean for us? Well, obviously, if the market should start to sell off here, we're going to recover these losses, and there's going to be very little to prevent it from allowing us not to make some money back. But this consolidation period, I just want to show this to you as well, as I've been talking about at energy level. You just come to the site, you come to charts, you come to energy level, and you can see that the weakness, or in this case the consolidation that's underway. Coffee is the second lowest market listed here as having the strongest consolidation period. Soybeans, which actually broke out today to the downside, and that's part of what I'm thinking might be happening here with coffee. Coffee's on this list as well. So if the market does not find that support level and does really start to sell off, there's going to be very little to prevent it from happening. But there's the wrinkle. Right now, we're again the starting point. We're right really on this level right now, and the market could, if because you're in an energy level, doesn't really give you an idea as to which way the market's going, could explode to the upside. And I base that on our seasonal charts. So let me pull those up here. Here is coffee. Here is the 5, the 10, and 15 year charts, and this being mid-November, you see that there's historically been a big surge that has occurred in coffee at around this time period, and it's short-lived. It doesn't last for a long period, but it is something that can be explosive. And the fact that we're in that energy level right now, where the market is primed and ready for an explosive move, we could see a little bit of a tick up in the market. So as I mentioned, the systems are currently short the market, but they'll turn on a dime if the market should start to rally. If the market does kind of trickle over this edge here, not find any support and really fall to the downside, then everything's cool on that side. So what I want you to do with this deep dive is simply realize that coffee is in an energy level, meaning consolidation level, and it is primed and ready for some type of an explosive move, one way or the other. The systems are betting on the short side, but I could just as easily see this happening on the upside. The great thing about being a systematic trader is that we have no ego. So if the systems see the market is starting to rally to the upside based on that seasonal chart that I just pointed out, then we'll find ourselves in a position where we'll quickly liquidate our shorts and we'll just simply go long the market. So keep an eye on coffee and or the ETF Joe, and we'll see what does take place here in the coming days. Thanks for watching. We'll take a look at another market tomorrow. Bye-bye.